Hello everyone and welcome to this historic event where we are going to release for the first time ever the Constitution of Investing. 76% of India's adult population is not financially literate. This financial illiteracy puts a big burden on the country. People resort to buying physical and short-term assets. This is contrary to the country's long-term capital requirement. Therefore, there is a dire and an urgent need for a dependable guidebook on investing that can help billions of potential investors plan their investments better. We at Reliance Mutual Fund decided to take this up as a challenge. A constitution committee was formed to lead this onerous task of putting this document together. After a lot of deliberations and interactions, today we are ready with the constitution to be unveiled. And to do the honors, we have with us most of the members of the Constitution Committee. Allow me to introduce them to you. Mr. A.K. Narayan, Chartered Accountant and Financial Planner with over 2 decades of industrial experience in corporate finance and top management. He has also authored a book titled How to Invest Right and Prosper. Mr. Ashish Shah, Managing Director, Wealth's First Portfolio Managers Limited. Mr. Vasant Kulkarni, a leading mutual fund distributor and financial columnist in leading Marathi daily Lok Satta. Mr. Sadashiv Fene, mutual fund distributor with over 25 years of experience. Ms. Mona Faki, founder, Allegiance Advisors. I now request Mr. Sandeep Walunj, the Chief Marketing Officer of Reliance Nippon Life Asset Management, to lead the panel discussion. Mr. Sandeep has conceptualized this initiative and will help us understand the perspective of the experts leading up to the Constitution.
Thank you, Megha, for the very generous introduction. Hello, everyone. We'll start today's discussion by summarizing what we have observed in our day-to-day work as the ideal investor behavior. The best behavior that you would like to talk about that our viewers can learn from and emulate. So we could probably start with you, Ashish.
Yeah, see, the behavior is a continuously changing, but in last 5 years, if you say immediate past tense, I'm very happy to see that mutual fund has been accepted widely with the household as an investment vehicle. And I think 25 years history is there. I know Reliance Growth Fund is 25, 26 year old. The track record is helping, as well as other asset class like a PPF and LIC, any insurance policies, the returns are also expectations lower than that. This, I think, comparatively as well as the mutual fund CA campaign and the good performance has led almost all, from particularly youths and below 30, mutual fund as a long-term goal-based vehicle for investment. That is the apparent change I see in my last 26 years of career.
Right, so thank you. Mr. Narayan, what have you seen as ideal investor behavior?
See, as things are changing now, I find that disposable income in the hands of the investors are increasing day by day, and they are also seeking, where to put in their surplus money. So to that extent, I found that they are shifting slowly from the traditional investments of putting money in the gold or real estate or in bank deposits to a better utility products like mutual fund and other financial assets. For 2 reasons I am seeing them. One, they are able to easily access to these products, and they are able to deploy their savings on a month-to-month basis through the help of systematic investment plan, as well as they are able to reach their goal on a timely basis. So I find that financial literacy programs conducted by various fund houses and the regulators have reached the masses in a very large way, and I am sure that more and more people will participate to make these financial products more viable for small retail investors.
Thank you, Mr. Narayan. Mona, what have you seen in your experience is a behavior that our viewers should emulate?
So one of the most important aspect that I've seen in my 25 plus history of being in the industry is youngsters. This mutual fund Sahi Hai actually has been a game changer. So we've noticed that young kids who start working, and very soon after they start working, they are willing to explore. They want to know where is it that they can invest, and particularly through mutual fund avenue. So this fixation for gold and real estate is kind of, I won't say it's over, but it's moving. At least the younger generation is more attracted towards financial assets. And and these kids are not coming for 1 to 3 years. They are agnostic to the volatility the market is, it is so inherent in the market. So this has been in my opinion, this has been a fantastic change that I have observed in the last many years.
Perfect. Vasant, you have been in the industry for almost 20, 25 years now. What have you seen as the behavior that our viewers should emulate?
Buying a term plan, there was earlier a lot of resistance. Now term plan is an accepted product, which is first step in financial planning. So this big change I have noticed.
All right, sure. Mr. Fene, what have been your observations?
Actually, up till so many years of this industry, we have changed our investors from a risk-averse kind of investors towards taking steps towards little risk by investing into capital markets through mutual funds, and now it has paid off over time, and they have realized from typical questions. When I started my career, मेरे बेटे का policy निकालना है. Means insurance was considered as investment product to start with. Now over the time they have changed. Sadashiv, now I want to start a SIP for my son. He has just started working. So that change has happened now, and that will help country as a whole to build up huge capital and also wealth creation for the masses. Thanks to mutual fund industry for doing all these things over time.
Right, right. Okay, so what we've seen is that, thanks to mutual funds, sahi hai probably, people are more comfortable with the idea of mutual funds. They do understand that there are risks involved, but they are comfortable with the volatility. They understand that mutual fund is probably the best route to benefit from the capital markets. There is an increasing incident of people preferring financial products to physical products, as Mona said. People are starting in early. People are doing more goal-based investing, and people understand financial planning as a concept, starting with the term plan, and probably learning to differentiate between investing and insurance, and probably look at a financial plan holistically.
Yes.
So if you have summed this well, Ashish bhai, may I request you to summarize this behavior for our Gujarati audience so that they could emulate it.
Gujarati investors, actually, they don't need much to understand. They are one of the largest investor community in this country. Anyway, છેલ્લા 25-30 વર્ષમાં ચેન્જીસ જોઈએ આપણે તો મોસ્ટ ઓફ ધ ગુજરાતી ઇન્વેસ્ટર ઓલ્સો એમની મોટાભાગની એસેટ ફાઇનાન્શિયલ એસેટ્સ આર ટોકિંગ પીપીએફ વોઝ સૌથી વધારે પોપ્યુલર હતું એલઆઈસી પોલિસી પછી, પરંતુ છેલ્લા 5 વર્ષની અંદર 6 વર્ષની અંદર જોઈ શકો છો કે પીપીએફ વત્તા બેંક ડિપોઝિટ્સમાં ટેક્સ કાપ્યા પછીનું વળતર ઘણું ઘટી ગયું છે, અને મ્યુચ્યુઅલ ફંડ સહીએ કેમ્પેન વત્તા 25-26 વર્ષના મ્યુચ્યુઅલ ફંડના ટ્રેક રેકોર્ડ, રિલાયન્સનો જ ગ્રોથ ફંડ હેઝ ગોન ઓલમોસ્ટ 100 times ઇન લાસ્ટ 26 years. આ બધી વસ્તુઓનો પ્રચાર થયો છે, અને પ્રચારને બહુ સારી રીતે સરળ ભાષામાં સમજાવવામાં આવ્યો છે. અથાગ પ્રયત્નો ડિસ્ટ્રીબ્યુટરોએ, એસેટ મેનેજમેન્ટ કંપની અને સેબીએ કર્યા છે. તો એનાથી આઈ થિંક મ્યુચ્યુઅલ ફંડ જે એક વ્હીકલ છે ઇન્વેસ્ટમેન્ટ માટેનું, રિસ્ક મેનેજમેન્ટ માટેનું અને ગોલ સેટ કરવાનું, એ એકદમ પોપ્યુલર થઈ ગયું છે. અને આઈ થિંક અને યંગ જનરેશનમાં તો એસઆઈપી હેઝ બીકમ એ બઝવર્ડ ના, આઈ થિંક. એટલે ગુજરાતી ઇન્વેસ્ટરોને મારી ખરેખર અપીલ છે કે મ્યુચ્યુઅલ ફંડમાં તમારે લાંબા ગાળા માટે ચોક્કસ વધારે સારું વળતર મળશે. ભલે આપણે ડાયરેક્ટ શેર્સમાં પણ વન ઓફ ધ લાર્જેસ્ટ ઇન્વેસ્ટર છીએ ઇન્ડિયામાં એઝ અ સ્ટેટ, છતાં પણ મારો 26 વર્ષનો અનુભવ કહે છે કે મ્યુચ્યુઅલ ફંડમાં જે વળતર લાંબા ગાળે આપણને મળ્યું છે એનાથી વધારે વળતર બીજે ક્યાંય મળવાની સંભાવના હતી પણ નહીં, અને કદાચ ફ્યુચરમાં પણ નથી.
Thank you. So I think what the panel has put forth really validates our thinking that now time is ripe for constitution of investing, because if so many people are coming into the mutual fund industry, I think we need to be putting together a guidebook which will help each one of them plan their investment better and stick to their financial plans through the thick and thin of the market. Great. So with that, I think we'll move to the next question. And that is going to be about the first topic of the Constitution of Investing. It talks about the difference between saving and investing. May I request Mona to summarize that in short, for our audience?
Right, yeah. So I think now people are realizing that the difference between saving and investments. So savings, essentially they're able to differentiate, like if you park your money in a savings account, bank account, and that is saving, it is doing nothing to your money. It grows at maybe minimal amount, maybe 4%. That's what I understand saving bank accounts are giving you. And how do they, now they've understood that investment means they have to earn more than what inflation is. So let's just say what cost me 100 rupees today will cost me 106. So they understand now that I have to earn more than 106. That's real investments. And also taking taxation into account. So I think that awareness is growing pretty rampantly. We have a long way to go for the larger masses to understand this very fundamental aspect of differentiating between savings and investments, but it's there.
There you go. So basically, you need to be beating inflation and taxation, and an investment that generates enough returns to beat taxation and inflation is called investment. May I request Vasant to summarize this in Marathi for our Marathi audience?
बचत आणि गुंतवणूक या पूर्णपणे दोन वेगवेगळ्या गोष्टी आहेत. केवळ पैसे सेविंग अकाउंटमध्ये बँकेत ठेवल्याने पैसे वाढत नाहीत आणि महागाई हा सगळ्यात मोठा शत्रू असल्याने महागाईवर मात करायची असेल तर दीर्घकाळ गुंतवणूक करणं गरजेचं आहे. आणि म्युच्युअल फंडामध्ये केलेली गुंतवणूक ही महागाईच्या दरापेक्षा त्याच्यावरती मिळणारा परतावा हा दीर्घकाळामध्ये अधिक असल्यामुळे ती अत्यंत गुंतवणूकदारासाठी फायद्याची ठरते.
Thank you. We go to the next question. Many new investors who come new to the category after attending our investor education events come and say that, yeah, we understand the need for investing. I need to beat inflation and taxation. But the route that you are suggesting, which is investing in capital markets, has risks. In fact, you say that in your advertisement, in every advertisement. So I get scared about the risks. What are those risks and how do I mitigate those risks? Mr. Fene, you want to?
Actually, what happens, they see only the nominal returns, and also volatility puts them off. That up and down of capital market puts them off. When they, just now as we said, real return has to be calculated post inflation and taxes. So the moment they start understanding all these things, and this volatility, as we keep explaining them, it's temporary. Over time, if economic growth happens, your returns will be generated and they will be much higher to post inflation and taxes also. As we keep explaining, and already there are proven track record of mutual fund industry. Multiple schemes, many schemes are there of various categories which are deliver phenomenal post-tax returns, post-inflation also, which over time they start understanding, and this volatility will remain because capital markets are always volatile based on various news flows and other economic parameters. As they start all understanding all these things, they are ready to invest into those, because if their goals are to be met, their future goals have to be met, they have to take that risk. In fact, they are taking biggest risk by not investing here, because they will have lesser money for their future goals if they invest into the conventional and fixed return oriented investments.
Fantastic point there. Yeah, so what Mr. Fene just told us is that if you want to beat inflation and taxation, which you have to, then you will have to take some risk. And there are instruments which can mitigate that risk as much as possible through diversification and long-term investing like mutual funds. He also made a very interesting point where he said that by not investing in mutual funds, you are taking a bigger risk. Thank you. May I request Mr. Narayan to summarize this in Tamil for a Tamil audience?
முதலீட்டாளர்களுக்கு அதிகமான அளவில் ரிஸ்க் எடுக்கிறதுக்கு தயாராக இல்லை. அதுக்கு நாங்கள் என்ன சொல்கிறோம்னு சொன்னால், இது ரிஸ்க் எடுக்கிறதுக்கு அதிகமான தேவை இல்லைன்னா நீங்கள் அசர் அலோகேஷன் இஸ் ஒரு ஸ்டெப் எடுக்கணும். செகண்ட் முதலீட்டாளரின் கல்வி கூட்டங்கள், விழிப்புணர்ச்சி கூட்டங்கள் நீங்கள் அதிகமாக பங்கேற்க வேண்டியது இருக்குது. மூன்றாவது விதமாக பார்க்கும்பொழுது நம்மளுடைய ரிஸ்க் ப்ரொஃபைலுக்கு தேர்ந்தெடுத்து அதுக்கு தகுந்த மாதிரி முதலீடு செய்வதும் நல்லது. கட்டாயமாக நம்மளுடைய இன்ஃப்ளேஷனை பீட் பண்ணுறதுக்கு ஈக்விட்டி மார்க்கெட்டில் முதலீடு பண்ணுவது கரெக்டாக அணுகுமுறை கரெக்டான முறை. அது வந்து ஆலோசகர் மூலமாக முதலீடு செய்வது நல்லது.
Thank you, Mr. Narayan. As you know, this discussion is being shown live on various social media platforms and questions have started flowing in. So, Megha, do you have some interesting question for the panel?
Oh, yes, we have a lot of questions flowing in. So I'll take up the first question that is coming from Ram from Delhi. And his question is, I have started investing in mutual funds last year, and I'm seeing that both the funds that I've invested in are trading below their last year NAV. So he's confused.
Wonderful. So, two investments, two mutual funds, and they are trading below last year's NAV. Ashish bhai, what will you advise Ram?
Yeah.
I think it's a very common thing, in fact, in lighter sense, because you invest into the equity market via mutual fund, and you know, as Mr. Fene said, it is volatility is the only risk in this particular asset class. Obviously, last 1 year the market has been volatile because of a lot of reasons. We know and are known to almost everybody. That's why we can't expect in a mutual fund or in equity market, the day I invest, I will always get the positive return. And this is the first lesson Mr. Ram should understand. Okay, you have to bear with some bear phases of the market. It doesn't mean that you are going to lose your capital. See, there are two ways. One is the permanent loss of capital, second is the temporary loss of capital. That's why I advise Ram to stay put into the mutual for a longer period of time, which has always been told and advised. And in a long run, always you will get the reasonably good return. That is the way the equity market performs. I think you should stay invested.
So I think, Ram, your confusion is very well cleared now.
Right. Okay, so let's move to the next question that I have for the panel. After having understood the risk return equation, the need to beat inflation and therefore the need to take some risk, the next question is there are so many types of mutual funds and it gets confusing. So now with such an experienced panel, I'm going to attempt simplifying the types of mutual funds, right? So we'll probably start with Mr. Narayan. How will you explain in simple words the different types of mutual funds and which mutual fund should an investor go for their needs?
See, I would say that we have got about over 43 fund houses in India right now, which is registered with SEBI and regulated by SEBI. Now, when a small investor walk into our office, they always ask us how to go about investing. So, depending upon the risk profile, we always say you can choose either debt fund, balance fund or equity fund. These are the three broad classification I would always say. If your term is going to be 3 months, 6 months, 1 year, 2 years, I would always tell them to look at debt funds. And in case your period of investing is going to be over 3 years and less than 5 years, you can look at balance fund. And if you're going to look at more than 5 years as your time horizon, then look at equity fund for your avenue. But anything less than 5 years or 6 years, I never suggest that equity fund will help you out in the long run.
Right. So that's an answer to Ram as well, that if you are looking to gain from equity mutual fund investments, then you ought to be looking at minimum 5 years of horizon. Vasant, would you be able to explain to our audience the difference between debt and equity? What is called debt, what is called equity, and what are the types of mutual funds and how they can be?
Basically, there are two ways to finance any business. One is borrowed fund and another is own funds. Whenever you borrow, you have to pay interest. Any instrument which has got interest component is a debt component, and the own capital which has got no interest attached to that instrument is a equity investment. The debt is of different types and of different time frame, duration. You have 30 days or 90 days CP, and you have also 10 years infrastructure bonds. So the mutual fund schemes which invest in such instruments, that is CP or CD or medium term 3 years, 4 years bond, government securities, treasury bills, are debt instruments or debt schemes. While the mutual fund which invest in IPO or in the equity of listed entities are equity mutual funds. Then in these equity mutual fund, there are different classes depending upon the market capitalization, that is mid cap or large cap or small cap schemes. They are solution oriented schemes such as children plan or retirement plan. There are industry schemes such as the particular fund invest in pharma sector, particular fund invest in infrastructure sector, banking sector. So there are sectoral funds. So SEBI has classified 36 types of fund. As Mr. Narayanan said, there are 43 fund houses and 36 schemes of each fund houses. There is a wide range of investor to select, and what I feel that investor, they do not classify their needs. If they classify their short term needs and long term needs, then they can select for short term needs, they should select a debt fund that is up to 3-year maturity or 1 year maturity, that is liquid fund they should have, and for long term nature equity is the best returns they can expect.
Right. So what you will learn today is that there are two very large types of mutual funds, the debt and the equity. Debt mutual funds essentially invest in securities that bear returns, and then therefore these are also called fixed income mutual funds. These investments do not have any impact on the profitability of the company in which you are investing, because you're supposed to be getting a fixed return, and then therefore they are considered a little more secure, less risky compared to the equity mutual funds. Equity mutual funds is like participating into the capital base of a company, taking a partnership in a company, and then therefore your gain is linked to the profitability of the business, directly or indirectly, and then therefore there is a little higher risk, but there is also a little higher potential reward there. May I request Mona to summarize this in Hindi for our Hindi audience?
So म्यूचुअल फंड्स अलग अलग किस्म के होते हैं. एक तो डेट फंड्स होते हैं, एक ब्रॉडली डेट फंड्स और इक्विटी फंड्स. और डेट फंड्स में होते हैं अलग किस्म के जो आपके 1 साल के जो नीड्स हैं उसको एड्रेस करते हैं, तो वो लिक्विड फंड्स होते हैं. फिर होते हैं 3 साल तक आपके अगर कोई गोल है जिसका 3 साल में आपको पैसा लगने वाला है, तो वो गोल को एड्रेस करने के लिए हम डेट फंड्स में पैसा डालेंगे. और जो 3 और 5 साल के बीच में जो पैसा लगने वाला है वो हम बैलेंस्ड फंड्स में डालेंगे जिसमें डेट और इक्विटी का भी कंपोनेंट होता है. और जो 5 साल के बाद जो पैसा लगेगा जिसमें आप सब में ज़्यादा कमाओगे वो रहेगा इक्विटी म्यूचुअल फंड्स रहेंगे. मगर ये थोड़े वॉलेटाइल रहते हैं, इसीलिए हम कहते हैं कि आप लोग 5 साल का कम से कम आपका टाइम फ्रेम होना चाहिए. तो बेसिकली यही मेजरली यही ब्रॉडली यही म्यूचुअल फंड्स होते हैं.
Thank you very much. I see that the ticker ticking of the questions. So,
Yeah.
Megha, what is the next question?
So the next one is coming from Manish from Mumbai, and his question is, I have been observing that the NAV of my fund does not go up when Sensex goes up. So have I invested in the wrong fund?
Very good. Vasant, please can you answer that?
See, this common mistake investor makes, because there is a benchmark attached to that scheme, and we talk broadly Sensex and Nifty, which are large cap indices. Whenever you are comparing the NAV or the returns of any scheme, you should compare it with the benchmark performance. And definitely I am sure that Manish will find that his schemes are better performing or their performance is better than the benchmark of the particular scheme. So not only the market goes up, that means my NAV should go, but he should compare it with the benchmark, which 99% people forget.
Yeah. Perfect. Yeah, so what we learned is that, a Sensex or a Nifty essentially tracks the top 30 or top 50 stocks of the stock market. Your fund may not have invested into those stocks, and then therefore it will not go up or down the way Nifty or Sensex goes up and down. You cannot judge the performance of the entire market which has got more than 5,000 stocks, just by how the 30 or 50 stocks are performing. So you got to be looking at your mutual fund as a separate entity, and you should be tracking its own fundamental benchmark rather than being swayed by Nifty or Sensex. Ashish bhai, will you be able to translate that in Gujarati for her?
See, mutual fund ની schemes, Sensex and Nifty represent 30 and 50 top stocks as per market capitalization. એટલે એ સિવાય પણ મ્યુચ્યુઅલ ફંડને આપણે પૈસા કેમ આપીએ? બિકોઝ ફંડ મેનેજર્સ ઇઝ અલાઉડ ટુ ઇન્વેસ્ટ આ 50 અને 30 શેરની બહારનામાં પણ રોકાણ કરવાનું હોય, અને આપણે ઘણીવાર એવું માનીએ છીએ કે એમાં વધારે રિટર્ન પણ આવે છે. અને લાસ્ટ 25 years has shown, આપણને જોવામાં આવ્યું છે કે સેન્સેક્સ અને નિફ્ટી કરતાં મોટાભાગના ફંડોએ આઉટ પરફોર્મ કરેલું છે. એટલા માટે આપણે જે ફંડ હોય એ દરેકનો પોતાનો એક ઇન્ડેક્સ હોય છે, જેને બેન્ચમાર્ક કહે છે. તો એની કમ્પેરમાં આપણું ફંડ કેવું પ્લસ કે માઇનસ કરે છે એ આપણું ધ્યાન હોવું જોઈએ, નહીં કે સેન્સેક્સ કે નિફ્ટી ઉપર જ. એ મારા દર્શકોને જણાવવાનું છે, કારણ કે છેલ્લા એક વર્ષમાં આ જ વસ્તુ થઈ છે કે નિફ્ટી અને સેન્સેક્સ બહુ ઘટ્યા નથી, પરંતુ મિડ કેપ અને સ્મોલ કેપમાં જે ફંડો હતા, જે લોકો 2017માં આપણને વધારે પડતું વળતર આપ્યું હતું, એ ફંડોમાં ઘણો ઘસારો થયો છે. એટલે એમાં આપણને કોઈ નિરાશ થવાની જરૂર નથી, કારણ કે આપણે જે ઇન્ડેક્સમાં રૂક્યું હતું એ ઇન્ડેક્સ પોતે જ ઘટી ગયેલો છે. એટલે ઇન્વેસ્ટરોએ એમના એડવાઇઝર જોડે સમજવું જોઈએ કે હું કયા ઇન્ડેક્સને આધારિત રોકાણ કરું છું. ઇટ ઇઝ લાઈક કે T20 મેચ હોય, 51 ડે મેચ હોય, ટેસ્ટ પ્લેયર, ત્રણેયમાં અલગ અલગ ટીમ જે હોય છે અત્યારે, એવી જ રીતે મ્યુચ્યુઅલ ફંડની અંદર સાદી ભાષામાં કહેવાય કે અલગ અલગ જાતના બેન્ચમાર્ક છે, અલગ જાતની સ્કીમ છે, એ સમજીને રોકાણ કરવું જોઈએ.
Thank you very much, Ashish bhai. I think we'll take one more question from the audience.
Yeah, so this one, okay, this question has been asked by two of them together actually. And this question is from Swami from Chennai. So are mutual fund earnings subject to tax? And if yes, what is the tax applicability?
Right. Can I ask Mr. Narayan to answer that first in English and then in Tamil?
Yeah. See, the general question the investors have in their mind is, while investing in the mutual fund, do they have to pay tax or it's all tax free? Now, the first and foremost is the applicability of taxation comes only when you make a sale of something. That is the first and foremost thing we should understand. So, now the Income Tax Act has levied a 10% tax on the equity funds as well in the last year. But as far as the dividends are concerned, there is no taxation when they receive it in their hands, because the mutual fund houses themselves are paying dividend distribution tax both in debt as well as in equity schemes. So, as far as the dividends are concerned, they need not worry at all. Whatever dividends they get in their hands is tax free. As far as the selling or redemption of the mutual fund schemes are concerned, they have to necessarily pay. In the case of debt funds, if it is going to be held within the less than 3 years, then it becomes a short term. If they are going to hold it beyond 3 years, then it qualifies for long term as well as for indexation benefit. As far as the equity is concerned, if they are going to hold it for lesser than 12 months, then it comes under the category of short term, and in case it becomes more than 12 months, it comes under the category of long term capital gains. So, these are the two small things they should know while investing in the mutual fund.
Yeah. Let's also talk about the tax brackets, the percentage tax applicability.
Now, as far as the dividend taxation is concerned, the dividend distribution tax is deducted by them, so need not unduly worry about that at all. As far as the long-term capital gains is concerned, definitely the on the equity component, now we have to pay the short-term of 15% now, and definitely everybody has to, while filing the returns, they have to do it. The advantage of mutual fund investing is there is no tax deduction at source, except in the case of NRIs where the debt funds are coming under the category of TDS, otherwise there is no TDS at all for them. So, as far as the equity component is concerned, again at the end of the year, they have to take the purchase cost and the sale price, and then they deduct, and then they have to pay the tax appropriately.
Correct. And the long-term capital gains in case of equity mutual funds is 10%.
10%, yes.
In case of a debt fund, you pay tax equivalent to
See,
your
where the
applicable
debt
bracket.
fund is concerned, whatever is your bracket, whether you fall in the category of 10%, 20% or 30%, whichever category you are filing a return, obviously you will fall in that. In case you are not having any other income, then you can even as well say that it is going to be a tax-free income as well.
Perfect. So, that is for the short term. For the long term, you obviously qualify for the indexation benefit.
Correct.
In case of debt fund. All right, sir. So in Tamil, please.
யா இந்த முதலீடு செய்யும்பொழுது நம்மளுடைய டாக்ஸேஷன் வரி விகிதம் எவ்வளோங்கிறது தெரிஞ்சுக்கிறது ரொம்ப முக்கியம். கையில் முதலீட்டாளர்கள் டிவிடெண்ட் கிடைக்கும் பொழுது அவங்களுக்கு டிவிடெண்டில் டேக்ஸ் எதுவுமே கிடையாது. ஏன்னா மியூச்சுவல் ஃபண்ட் ஹவுஸஸே டிவிடெண்ட் டிஸ்ட்ரிபியூஷன் டேக்ஸ்னு கழிச்சிட்டு தான் நம்மக்கிட்ட கொடுக்குறாங்க. டெட் ஃபண்டாக இருந்தாலும் சரி, ஈக்விட்டி ஃபண்டாக இருந்தாலும் சரி. ஆனால் அவங்களுடைய முதலீடானது டெட் ஃபண்டில் இருக்கும் பொழுது 3 வருட காலம் வரைக்கும் அவங்க வச்சுருந்தால் ஒழிய லாங் டேர்ம் கேபிட்டல் கெயின்ஸுக்கு அவங்க குவாலிஃபை ஆக மாட்டாங்க. அதனால் டெட் ஃபண்டில் முதலீடு செய்யும் பொழுது 3 ஆண்டு காலம் அவங்க முதலீடு செய்து அதில் இருந்தால்தான் அவங்களுக்கு லாங் டேர்ம் கேபிட்டல் கெயின்ஸ் டேக்ஸ் பெனிஃபிட்டும் கிடைக்கும், இண்டெக்ஸேஷன் பெனிஃபிட்டும் கிடைக்கும். அதே மாதிரி ஈக்விட்டி மார்க்கெட்டில் இன்வெஸ்ட் பண்ணும்பொழுது ஈக்விட்டி ஃபண்ட்ஸ் ஆனது 12 மாதம் அவங்க முதலீடு செய்ய வேண்டும். அப்படி செய்ய தவறினால் கட்டாயமாக ஷார்ட் டேர்ம் கேபிட்டல் கெயின்ஸ் அவங்க கட்ட வேண்டிய சூழ்நிலை ஏற்படும். ஓவர் 12 மந்த்ஸ் இருந்தாக ஆட்டோமேட்டிக்காக அவங்களுக்கு லாங் டேர்ம் கேபிட்டல் கெயின்ஸ் டேக்ஸில் அவங்களோட இந்த ப்ராக்கெட்டில் வந்துடும்.
Thank you very much. Now let's go to the last question that I have for the panel, second last question that I have for the panel, and I'll ask this to Mr. Fene. How do I start investing in mutual funds? What is the documentation? I hear that things are complex, many documents are required. So please simplify investing in mutual funds for us.
Actually, it is a similar KYC document just required. Normal, you have one photo, one PAN Xerox, and address proof like Aadhaar Xerox or passport Xerox or anything which shows your photo identity and address. Only that is submitted, your entire KYC is done. After that, only your check is required to invest and the application form relevant to that fund or fund house and the scheme. That's all. And better if you go to a distributor, he will help you just like that.
Right. So just with these 3 basic documents,
Yes.
you should be able to
Yes.
get going.
Maybe I can also add, if you want, that now the law also says that third party checks are not allowed. So one should have a bank account in their own name and only that check can be issued for this.
Very,
but as
very good
Penny was
practical
saying, it become very, very simplified today. Best is to approach a good distributor in their area or their town or city and ultimately take advantage of their presence and then start investing.
Right.
That becomes easier for an investor. A first time investor, so definitely it is easier to go through a distributor.
Right, right. May I request Vasant to translate this in Marathi for our Marathi audience?
म्युच्युअल फंडामध्ये गुंतवणूक करणं हे अतिशय सुलभ काम आहे. तुम्हाला तुमच्या पॅन कार्डाची एक झेरॉक्स, जे काही पत्त्यासाठी काही जी डॉक्युमेंट्स आहेत म्हणजे आधार, ड्रायव्हिंग लायसन, तुमचं बँक अकाउंटचं पहिलं पान, पासबुकवरचा पत्ता, हे असल्यानंतर आणि फोटो, एवढ्या गोष्टींची तुमची गरज असते. KYC फॉर्म असतो, तो KYC फॉर्म भरायचा, त्याच्याबरोबर हे डॉक्युमेंट्स लावायचे आणि म्युच्युअल फंडाच्या ऑफिसमध्ये किंवा तुमच्या जवळच्या म्युच्युअल फंड वितरकाकडे जायचं. हे कागद त्याला दिल्यानंतर तुमची KYC प्रोसेस कंप्लीट होते. KYC प्रोसेस झाल्यानंतर तुम्ही तुमच्या गरजेप्रमाणे SIP किंवा वन टाइम इन्व्हेस्टमेंट करू शकता.
आणि स्वतःच्या नावाचं बँक अकाउंट.
स्वतःच्या नावाचं बँक अकाउंट.
Okay. Now let's take 2 more questions from the audience.
Yeah, so the next one has come in from Radhika and she's from Bangalore. I have just started working and my salary is 40,000. I can invest most of it since I live with my parents. So which mutual fund should I invest in?
A representative for the younger generation, Muna, who wants to start investing. I think you just started earning.
Yes.
How would you advise her?
So honestly, just that much is not enough for me to assess whether she should invest the full 40%. So, but 40,000. But definitely, I would encourage her to, out of that money, to start an SIP of an amount that she feels is absolutely not needed to her for the next minimum 7 to 10 years, so that and it's not going to be an impediment or a burden on her to commit to that amount. That's how I would make her start, and maybe out of that 40,000 or 10,000 could be kept aside in a debt product, which in case she needs like what we call contingency fund, if you need money in an emergency or something like that. So divide the money as per her needs. That might be after having a conversation with her.
Okay.
Yeah, so this is
Wonderful. Mr. Fene, would you like to advise
Yes,
Radhika?
she is young and very much congratulations that she has just decided to start investing immediately the moment she has started working. To start with, she should create at least a lakh of rupees worth of her emergency fund through any of the normal debt funds. Accrual debt funds are better for her. Once that 1 to 1.5 lakhs are created as for emergency, after that she can go straightway into long-term SIPs of equity-oriented funds. She is so young and huge wealth likely to be created, so she can start investing in all three types of equity-oriented funds like large cap, mid cap, or small cap.
Right.
And she should distribute that 40,000 into either 2 or 3 types of equity-oriented funds, and look forward for the capital appreciation over time.
Wonderful. Mr. Narayanan, do you have any inputs for this particular?
Yeah, definitely it's a very good idea for a beginner to start investing in a mutual fund. I always say that don't wait for your probation to end, or you wait for a permanent job to start your investing. The first salary should be the deciding factor for investing, and I'm glad that this girl has decided to invest, and whatever amount she can commit for a long term, she should look at equity fund, whether 10,000 or 20,000 rupees, because today it looks 40,000 is surplus available, but it may not be available all the time. So she cannot commit all the 40,000 at an SIP. So maybe at least 50% she should commit for a long term, and then other things like whatever my colleagues were saying, she should look at other debt products or something like that. But ultimately she should not stop that investment of 10,000 or 15,000 till she retires. That is my advice.
Long-term investing. Vasant, you look like.
There will be a lot of deviations and attractions that after some time she may think of having a foreign tour or buying a vehicle. I feel these deviations will keep her away from her goals. One need to identify a goal in the beginning. If she wants to buy a vehicle after 3 years, this should be one goal. And at least 10% of her savings she should invest for a very long term, which will create a great retirement corpus. So she should keep herself away from such attractions and deviations.
Perfect, sir. Attraction and deviation. Ashish bhai, anything to add?
See, this whatever my friends have said were very nice plans, and what Mona also said, you require to study her backgrounds and all. But suppose this 40,000 is she's staying with the parents, there is surplus to her, and if you really create wealth, this is absolutely something different which I used 10, 12 years before with a couple of clients like Radhika. She should go all out into 40,000 into equity mutual fund. Why? Because in most of the time we do this asset allocation at a very early age, with some emergency will come and some liquid money is required, and we are losing the upside, which is much larger than the whatever the money you are keeping for some emergencies. I think you are getting 6 to 7% return into liquid funds for emergencies, and your all equity funds is given 15-16% of the return. Why we should even 25% of the money we are depriving to get 7% less returns? Okay, suppose emergency comes after 2 years, you remove the money from equity fund. See, I had a couple of examples. See, this is a very aggressive plan, let me tell you honestly, all the viewers,
yes.
It is a very aggressive plan, but if the 21, 22 year, 23 year of person, if they want to real create wealth in this country, you use your mutual fund equity account as your bank account. Whenever you require money, just remove the money. What will happen? The market is 10% down, you will lose 10% of that particular amount. But just to keeping all this asset allocation and all, you are losing the biggest upside which is going to come into this country in coming 10 years. I think this is, honestly, it's a real T20 plan, but it's a really long-term plan. But if you play consistently, it is going to huge creation of wealth.
Wonderful. Awesome. So, Radhika, you had 5 of country's top financial advisors telling you what to do. I would summarize this as saying, if possible, try and meet an investment advisor or a mutual fund distributor who will be able to study your background carefully and also do your risk profiling, which will tell us, whether you are ready for a 2020 game or you are a conservative investor. Goal-based investing is an input that Vasant has given. Fix your financial goals, medium-term, short-term, long-term goals. Is also advised to look at a retirement fund. I think that's an excellent suggestion to start off as early as possible, because you give yourself a long time, to create a corpus which will see you through your retirement. We also heard Vasant speaking about a term plan earlier, which is an important foundation of a financial plan. He also spoke about not falling prey to distractions and market volatility. Stay invested through the thick and thin till the goal is not complete. Make sure that you do not let go of your investments. So I hope with that you will be able to have a great start to your investment journey. You have a next question?
Yeah, actually, we have a question coming from Ramesh from Rajkot, and he's put in this question twice actually. He wants to know what is NAV of a fund, and it is right that one should invest in a fund with lower NAV?
Oh, I was waiting for the second part of the question. Ashish bhai, would you like to go for it?
See, net asset value is practically a number of whatever total corpus of the funds divided by the number of the stakeholders, like unit holders. I think when I started in the mutual fund industry, most of the funds has come 10 rupees. That is a benchmark in India as per the SEBI and all. And I think one of the great fund has gone to 4 figure, that is 1000 plus NAV in this country. That's why NAV is just what is the value of your investment of that particular when you put the money. Now lower NAV, suppose you are investing in 1000 rupees NAV, 1 lakh rupees, and you are putting same 1 lakh rupees to 10 rupees NAV. If both the funds are performing same, your return will be identical. I can use the word identical up to the 4th digit or 5th digit. That's why NAV is not the misnomer. Now let me tell you again, because now there is 25, 30 years old of history, and this question is asked in my life by every day, you can say. Which player you will select who has scored a 5,000 runs, or which player you have selected as just a newcomer? That's why the fund has a fantastic track record of the CAGR, compounded annual growth return, and a good NAV. I think that is a better place to put the money. This is the way I tell my client. It doesn't mean that a newcomer is not going to be the great player, but having a 4-figure or a 3-figure NAV, we should not be distracted. We should go for 10 rupees NAV. Please be careful. Select the fund of the past track record, not the number NAV. Please.
Perfect. You have any more questions from the audience?
So I'll just take this last question. This has come in from Bose from Calcutta. And his question is, I have just retired. Do mutual funds have any options for me to earn a fixed monthly income on my investments?
Fixed monthly income, right, Mr. Narayan? You want to
Yeah, the mutual fund, when you look at the documents or advertisements, they always say that it carries a lot of risk. So a lot of people come and ask me, at the end of the thing, everywhere it says it's subject to market risk, and risk is very, very high. So we tell them that, the mutual funds declare dividends, mutual funds also give you returns, but it is neither assured nor guaranteed. This is the first and foremost thing I tell all my investors. Don't come and ask me whether you will get a fixed return every month. On the other hand, we can make a plan for them in such a way that we can have a systematic withdrawal plan fixed for any investor after giving a cooling period of 6 months. Suppose they have a retirement corpus of about 5 lakhs or 10 lakhs, I can fix it at 8% or 8.5%, giving a cooling period of 6 months or 7 months, and then make sure it is withdrawn on a monthly basis or quarterly basis for them, so that with a condition that they stay invested for a period of at least 5 years or 10 years. Systematic withdrawal plan may dip into little bit of capital if it is going to be 6 months or 1 year, but it will not have any harm if it is going to be kept for over a period of 5 years, because the break-even point may range from 4 years to 5 years. So one has to necessarily wait for 5 years. So systematic withdrawal plan, in my opinion, is the answer for getting a fixed return from a mutual fund house, rather than depending on the mutual fund houses to declare dividends on and off subject to their profitability.
Right. So systematic withdrawal plan is being recommended as a route to get a fixed monthly income in case of a retired income. Vasant, you want to add anything?
Yeah. See, there is one thumb rule that you should invest in the equity 100 minus your age. So at the age of 60 also, to beat the inflation, he need to have 40% investment in equity is must.
Right, right. So when you choose a fund, Mr. Bose, you should look for a 40% allocation to equity.
In equities.
And systematic withdrawal plan is the route that you should take. All right, so that brings me to the last question that I have for the panel, and I have made it to the most interesting. So in a minute or two, could you please summarize the common mistakes that you have seen people make while doing mutual fund investing that you would want our audience to avoid? We can start with Mr. Feni.
Generally, people invest for long term. and they accumulate kind of decent amounts, and suddenly for as such there is no goal planning as such, and for various reasons like going abroad or buying car, buying bike, or some requirement, something, for that they try and withdraw that amount. If it is goal based, or they know for what they are saving in for future requirement, then they may not do all these mistakes just like that, for, or sometimes impulse buying of certain things. These smaller means younger guys are more prone to that.
Prone to that, yeah.
And if they are told properly that this is for this goal, that's why better not to touch now, then only they wait. Otherwise, the mistake made is for that, and suddenly sometimes they withdraw entire amounts.
Correct.
For even smaller goals.
Correct, correct. So distraction was the point
Yeah.
that was made by Vasant
Yes.
earlier, and the solution to that is goal-based investing. Attach a goal to your investment,
Correct.
and do not, let go of the
Always
investment.
remind him or her at the time they want to withdraw in between, that your
One.
goal was this and we are planned for this, and you are now withdrawing, which is not a good
One
thing.
So attach a goal to your investment is the first mistake if you don't attach a goal to an investment. Mona, what's you have observed?
Yeah, so my observation is now the clients are few and far between, but nevertheless there are one, two odd ones. So even though you've explained to them that equity investment requires minimum of 5-year time frame to see the real returns, and when they see volatility kick in and markets going down and they see erosion of capital, so what happens, they tend to get panicky and sometimes they tend to exit, and which is a real bummer. I mean, you're never going to make money in this industry or in this markets without having the capacity to see capital erosion. So that is something, and it happened. I mean, if the client has stayed with you for many years, they don't do that. But there are few clients who are newer ones. They've not gone through a couple of cycles. They tend to opt out, and which is really not happening.
Right, okay. So reacting adversely to market volatility rather than taking benefit from it is a
Right.
mistake that you've seen people
Right.
make. Yeah, Ashish bhai?
See, mutual fund, most of the mutual funds, equity or debt, they are a very liquid instrument. Please, I request, observe investors, the liquidity they are using, not they are misusing liquidity. See, whenever they want something out of their old corpus for anything, what we said about car or foreign tour or something, that first thing they want to remove money from the mutual fund. And second thing, they look at volatility when it comes as for equity market. They always get needy. That's why they forget. See, that's why I always client, whenever you write a check, ask yourself why I am writing this check. What is the purpose of this check? If it is less than 1 year, go to liquid funds. Around 3 years, go to debt fund. 5 years for equity. That's why don't look at the newspaper, NAVs or televisions if you are really a long-term planner. But my experience, the mutual funds liquidity is the biggest problem and misused by most of the investors. In the one pretext was the pretext.
Right. So looking at mutual fund as an open investment that can be accessed anytime rather
Exactly.
than a closed investment that should not be open till the time you reach your goal is something that you have seen as a great common mistake. Mr. Narayan, what have you?
See, what I have seen is when the market is doing well, especially when the small cap and mid caps are doing well, a lot of investors think that they can make more money by chasing the returns. So they like to put more money into small cap, micro cap and mid cap rather than following some principles or goals. So they try to remove money from the large cap and divert the money here and there. So in that process they get hurt whenever there is a major market correction. So that one mistake I always see. Second thing is I always notice they think that they have got enough and more of insurance products, so they think that their investment goal is complete by keeping money in the insurance. So a lot of awareness is being created right now by talking about insurance and mutual fund houses, but still I find that lot more needs to be done to educate them, like what he was saying about the term policy, but I still feel that some more room is there to push these investors to make sure they understand the insurance is for protection, and for wealth creation you need to come to the mutual funds and to create on a long term basis sustainable wealth creation. So these two are in my opinion very good. And third, we already discussed about the difference between saving and investment. That I think has to be again and again drilled into their minds, that parking some surplus money in a savings bank doesn't create wealth, or by continuing your recurring deposit in a bank doesn't do it. Even today if you go to some people, they say I am putting a lot of recurring money in the recurring deposit to create wealth over a period of 10 years or 15 years. I always tell them it is very good to put in a fixed deposit for 1 year or 2 years, and it is very good to put money in an equity market for 10 years and more. For 10 years fixed deposit and recurring deposit is not good. On the other hand, equity market is very good for 10 years. But at the same time, for 1 year and 2 years, equity market may not give you the type of return. So you must know what is the product we are selecting and what product we should not select. So
Perfect. Selecting the right product.
right
for your
product at the
investment
right
need.
time is very, very important, aligning our term also.
Right. Vasant, what is it?
Common mistake is I observe that they pay 10 years, 20 years, 15 years, 25 years premium for insurance companies, but run SIP only for 3.5 years or 4 years. Actually, SIP is an equity product which will pay in long run. So they should continue their SIP tenure to 10 years or 15 years, and they should not switch after 3.5, 4 years. Many times it happens that fund is not performing, that's why you stop. But if you consider for long term, the returns of that category average will be same. So they should not make a mistake of suspending their SIP in after 3 years or 4 years because of fund performance.
Right. Okay. So selecting the right product as per your financial plan, understanding that equity mutual funds is a long-term product, or confusing, the duration of that is required for an equity mutual fund to perform. Looking at mutual fund as a come in and go out kind of a product rather than stay invested kind of a product. And goal-based investing, are some of the things that we have seen, or not doing goal-based investing are some of the things that, or reacting to market volatility in an adverse fashion are some of the mistakes that the panel have seen. May I request Mr. Fede to translate this in Marathi so that our viewers will not repeat these mistakes.
ॲक्च्युली नेहमी काय होतं, आपण लॉंग टर्मसाठी इन्व्हेस्ट करतो आणि काहीमध्ये काही जरुरी गोष्टी येतात किंवा नाही आहेत आणि अननेसेसरीली आपण त्या गोष्टींसाठी ते पैसे आधीच विड्रॉ करतो. ज्या गोष्टीसाठी आपण लॉंग टर्म रिटायरमेंट प्लॅनिंग किंवा कशासाठी स्टार्ट केलेलं असतं इन्व्हेस्टिंग, आणि सडनली मग एक कार घेण्यासाठी किंवा फॉरेन टूरसाठी म्हणून आपण काही पैसे त्याच्यातले विड्रॉ करतो. त्याच्यामुळे ते लॉंग टर्म कंपाऊंडिंगवर प्रचंड इफेक्ट होतो. यू ब्रेक युअर, म्हणजे तुमचं कंपाऊंडिंग इफेक्ट तुम्ही ब्रेक करता, त्याच्यामुळे फ्युचर सेव्हिंगवर सगळा अफेक्ट होतो. तर ती मिस्टेक न केलेली चांगली. आणि गोल बेस्ड राहिलं तर ज्या गोलसाठी तुम्ही तुमचं मुद्दल जमवताय ते गोल सेट पोचेपर्यंत शक्यतो ते विड्रॉ न केलेले बरे.
Right. Mona, will you translate that in Hindi for Hindi?
Sure. So हम लोग अक्सर ये गलती करते हैं कि हम स्टार्ट करते हैं इन्वेस्टमेंट, स्पेशली एक्विटी इन्वेस्टमेंट स्टार्ट करते हैं. हम लोग का टाइम फ्रेम होता है 5 साल, मगर अक्सर वी डोंट स्टिक टू वो टाइम फ्रेम. हम लोग ऑब्जर्व नहीं करते. जहाँ मार्केट नीचे चले जाते हैं तो हम लोग सोचते हैं कि अब घबराहट में आके उसे हम बेच देते हैं, जो कि नहीं होना चाहिए. हमेशा एक्विटी इन्वेस्टमेंट्स बहुत लंबे अरसे के लिए देखना चाहिए. एंड यू शुड नॉट ये मार्केट चाहे ऊपर जाए नीचे जाए ये भूल जाना चाहिए कि मैंने इतने सालों के लिए कम से कम 7, 10, 15 साल के लिए किए हैं, और बस उसे भूल जाना चाहिए. That's my thing.
Thank you. Ashish bhai, will you translate that in Gujarati?
સી મ્યુચ્યુઅલ ફંડમાં ઇન્વેસ્ટમેન્ટ કરીએ ત્યારે આપણે પહેલાં આપણો શું ગોલ છે અથવા પર્પઝ છે જાણીને ઇન્વેસ્ટમેન્ટ કરીએ તો એ પર્પઝને હંમેશા માટે આપણે વળગી રહેવું જોઈએ. અને કોઈ પણ વસ્તુ, કોઈ પણ પૈસાની જરૂર પડે ત્યારે પહેલી જ વસ્તુ મ્યુચ્યુઅલ ફંડ લિક્વિડ છે કે ગમે ત્યારે 2 દિવસમાં કે 1 દિવસમાં પૈસા મળી જાય છે, એટલે એમાંથી જ ઉપાડી લેવા એ અભિગમ ના રાખવો જોઈએ. ઇક્વિટી માર્કેટમાં આપણે બધા જાણીએ છીએ કે 5 વર્ષથી ઉપર જ રિટર્ન મળે છે, તો એ પૈસા ત્યાં રહેવા જ દેવા જોઈએ. અને માર્કેટ ઘટે છે તો એ વોલેટાલિટી છે એનો પ્રકાર છે, આપણે જાણેલું જ છે પૈસા નાખતા પહેલાં. તો એ પ્રમાણે એનું વર્તન, એ ટૂંકમાં આપણે જે વર્તન અને વ્યવહાર છે ને બંને સરખા રાખવા જોઈએ. તો જ આપણું જે નિર્ધારિત વળતર છે અને આપણો ગોલ છે સેટ થશે. અને ઇમ્પલ્સિવ થઈને કોઈ લાગણીમાં આવીને ઇન્વેસ્ટમેન્ટ અને ડિસઇન્વેસ્ટમેન્ટ બંને કરવાના નિર્ણયો ના લેવા જોઈએ. મારી એક જ રિક્વેસ્ટ છે ઇન્વેસ્ટરોને.
Thank you. Mr. Narayan, will you end that with a Tamil translation of
முதலீட்டாளர்கள் பல தவறுகளை செய்கிறார்கள். அந்த தவறுகளை அவர்கள் கட்டாயமாக அதை செய்யாமல் இருப்பது நல்லது. அதில் முக்கியமாக பார்க்கும்போது இன்சூரன்ஸை முதலீடு என்று நினைத்துக்கொண்டு நிறைய பேர் முதலீடு செய்கிறார்கள். இது ஒரு பெரிய தவறு. முதலீடு ஒரு பாதுகாப்புக்கு வேண்டி பார்க்க வேண்டுமே தவிர மற்றபடி அதை ஒரு வளர்ச்சி பொருளாக கருதக்கூடாது. இரண்டாவது, ஈக்விட்டி மார்க்கெட்டுங்கிறது ஒரு லாங் டேர்ம், ஒரு தொலைநோக்கு பார்வையுடன் பார்க்க வேண்டும். அது லாங் டேர்ம் சொல்லும்போது 15 ஆண்டு காலம் இருக்கலாம், 20 ஆண்டு காலம் இருக்கலாம். அதை தொடர்ச்சியாக முதலீடு செய்வது தான் அவங்களுக்கு வெல்த் கிரியேஷனில் வர முடியும். அந்த மாதிரி நம்ம பார்க்கும்போது பல தவறுகளை முதலீட்டாளர்கள் செய்கிறார்கள். அதே மாதிரி ரிட்டர்னை சேஸ் பண்ணி இந்த மிட் கேப் ஸ்மால் கேப் ஃபண்ட்ஸ்லையும் முதலீடுகள் செய்கிறார்கள். அதையும் அவர்கள் தவிர்க்க வேண்டும். இரண்டாவது அவங்க முதலீடு செய்து விட்டு ஒரு 2 ஆண்டு காலம் 3 ஆண்டு காலத்துக்கு ஒரு டெம்பரரியாக அவங்களுக்கு பணம் தேவைப்படும் பொழுது உடனடியாக என்ன பண்ணுகிறார்கள் என்றால் மியூச்சுவல் ஃபண்டில் அவங்க ரிடம்ஷன் சொல்லி கொண்டு அவங்க அதுலேருந்து பணத்தை எடுத்துட்டு அதை யூஸ் பண்ணுறாங்க. அது ரொம்ப தவறான காரியம். பவர் ஆஃப் காம்பவுண்டிங் அவங்களுக்கு இருக்க வேண்டிய ஒரு நிர்பந்தம் இருக்க வேண்டியிருந்தால் அவங்களுக்கு தொலைநோக்கு பார்வையுடன் பார்க்க வேண்டும்.
Thank you. Over to Megha for the reveal.
Yeah, thank you so much all for a very interesting and insightful discussion. It is indeed very fulfilling and satisfying achievement for all of us to put together the constitution of investing. Now, without any further ado, let's get down to the most important part of today's session, and that is the unveiling of the constitution of investing. So I'm sure that all of us are eager to put our hands onto the monumental document. So let us get going right away.
Okay. The constitution of investing.
To go into rush, thank you.
You're not open.
Super. Okay, so we have with us the constitution of investing. Ladies and gentlemen, thank you very much for all the effort that you have put in for this, and I hope that our viewers will download it, use it, and take it as a guide for their mutual fund investment plans.
As
Thank you very much.
distributor also, I would like to thank Reliance Mutual Fund for taking this initiative and asking us to join for this team and helping them to create this document. Thank you.
Thank you.
Thank you.
Thank you,
all.
Sandeep.
very
Thank
much.
you.
Thank you.
Yeah, thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.